Welcome back, everyone. It's time for another deep dive, and today we're going to be tackling Allcargo Logistics and their Q3 FY25 performance. You guys have given us a really interesting mix to work with here: earnings call transcript, the full financial report, and even their investor presentation, plus some really sharp questions. So this should be fun.
Yeah, looks like we've got quite a package here to unpack about Allcargo's current position.
Okay, so before we get into the nitty-gritty, just a quick reminder: Allcargo has those three main segments, right? International supply chain, ISC, express distribution, and contract logistics. We can think of those as our guideposts today.
Yeah, good framework, especially since each segment seems to be telling its own story this quarter.
Exactly. And here's a fun fact to kick us off. Allcargo is the global #1 in something called LCL consolidation. Imagine ride-sharing, but for cargo. So they combine smaller shipments from different clients into a single container. It's a niche market, but one where size really matters.
Yeah, and what's fascinating to me is they're using that global LCL network as a springboard. They're rapidly expanding into full container load, FCL shipping, air freight. It's ambitious.
Makes you wonder if they're aiming to become like the go-to platform for logistics, like the Amazon of the industry. But hold on. Before we get ahead of ourselves, let's zoom out to their overall financial performance. Revenue's up a healthy 28% year over year, hitting 40,106 crore. But there's a twist.
Yeah, that 41% profit dip definitely raises an eyebrow. Digging into the earnings call, their chief strategy officer talked about internal restructuring and a heavy focus on tech to control costs. And these often have upfront expenses that hit short-term profits.
So short-term pain for long-term gain. Potentially, are we seeing that reflected elsewhere in the numbers?
Well, look at EBITDA, which factored out those restructuring costs. It's up 24% year over year. To me, that suggests the core business is strong. It's more like they're making strategic investments for the future.
Got it. So growing pains, but with signs of strength underneath. Now, what about that 614 rupees net debt they mentioned? Should we be concerned?
It's definitely noteworthy, though it is down slightly from last quarter when you factor in dividend payments. What's important is they're aware of it. They're actively trying to optimize their cost structure, which should help manage that debt burden.
Okay, makes sense. Now, let's zoom in on that international supply chain ISC segment. Their core business. We know they dominate LCL, but what's the growth story looking like?
Well, LCL saw modest growth, up 2% year over year. But here's the intriguing part. FCL volume is up 11%. That shift from smaller LCL to larger FCL shipments could signal a broader change in global trade. Maybe businesses are consolidating shipments due to economic uncertainty?
Or maybe Allcargo is deliberately pushing into FCL to broaden their revenue streams. They're not just relying on their LCL dominance.
Exactly. And let's not forget their tech push in ISC, that ECU 360 platform they keep highlighting. They're going all in on digital tools that provide real-time tracking, instant quotes, all designed to simplify things for their clients. In an industry that's been traditionally analog, this could be a game changer.
It's like they're trying to bring logistics into the 21st century, leapfrogging the competition with technology. But are they actually getting results from this tech investment?
Well, look at their yield improvement, particularly in FCL. They're getting more revenue per container. This might suggest that their tech is working, helping them optimize pricing and how they use those containers.
So tech isn't just a buzzword for them, it's potentially driving real financial gains. Now let's move on to their express distribution segment, their domestic package delivery arm.
And it's an area where their focus on cost optimization is really shining. Their EBITDA for Q3 is up a staggering 215% year over year.
Wow, 215%. Okay, that demands explanation. What's driving this explosive growth? Is it the e-commerce boom everyone's talking about?
It's playing a part for sure. They just hit their highest ever quarterly volume, likely fueled by increased online shopping. But they're not just riding the e-commerce wave passively.
So they're using some of that fancy tech in express distribution too, not just in the international side of things.
You bet. They're using AI for dynamic pricing, even for predicting customer service needs. Remember that generative AI chatbot from the investor presentation? This isn't just about cutting costs. It's about creating a better experience for customers.
Interesting. They're using tech on multiple fronts. It's not just about efficiency. It's about competing on speed, reliability, all those things that matter in a crowded market. Now let's turn to their contract logistics segment. This is where they offer end-to-end supply chain management.
And it's growing rapidly, up 62% year over year. They're laser focused on specific sectors, chemicals, auto, and of course, e-commerce.
Smart move tapping into those high-growth areas. But what makes these segments so attractive for Allcargo specifically? Why these and not others?
Well, think about it. The e-commerce boom obviously fuels demand for warehousing and distribution. And the auto industry, they're probably riding the electric vehicle wave with all those complex supply chains for parts and batteries.
And they already have a strong base in chemical warehousing. They can leverage that expertise to offer integrated solutions, covering the entire supply chain from storage to transportation. It's smart playing to their strengths and expanding where they see the most potential.
Yeah, Their investor presentation had some great examples of how they're solving real-world problems in this segment, like helping a major chemical manufacturer boost efficiency and safety in their warehousing.
And that complex warehousing solution they developed for a bearing and seal manufacturer, they're really showing off their expertise here, offering custom solutions instead of generic services.
Exactly. They're not just providers, they're positioning themselves as strategic partners, understanding the specific needs of each industry. And that approach seems to be working, judging by their impressive growth in this area. But let's take a step back for a moment and connect this to you, the listener. Why should you care about Allcargo's performance?
Good point. We're not just dissecting a company here. Allcargo's story is a window into global trends. The rise of e-commerce digitization, increasingly complex supply chains. These forces are shaping our world.
And Allcargo's right in the thick of it, trying to navigate these trends and set themselves up for long-term success. Their performance, their struggles, their decisions, they offer valuable insights into the future of the entire logistics industry.
So we're not just looking at numbers, we're seeing a microcosm of bigger shifts happening around us. But it's not all smooth sailing for Allcargo. They've got that restructuring going on, plus that income tax investigation.
Yes, those are significant developments, and we'll delve into those right after a quick break.
All right, we're back, and it's time to tackle those insightful questions you sent in. These get to the heart of what's happening with Allcargo.
Yeah, and remember, listener, these came directly from you, so we're tailoring this deep dive to what matters most to you. The first one here asks about comparing Allcargo's Q3 FY25 performance to the previous quarter and the same period last year.
Yeah, we've touched on this, but let's put it all together. Consolidated revenue is up 28% year over year, but slightly down compared to last quarter.
Correct. And profit took a dip this quarter, down 41% year over year, and a significant 73% compared to the previous quarter. But as we discussed earlier, EBITDA tells a different story. It's up 24% year over year and essentially flat compared to the previous quarter.
So those raw numbers might seem alarming at first glance, but the underlying business seems to be performing well.
Exactly. It's crucial to look beyond the surface level when analyzing financial performance. The next question is about the key revenue drivers this quarter and whether any particular segment outperformed.
Well, all three segments, ISC Express Distribution and Contract Logistics, contributed to revenue growth. But Contract Logistics was the star performer, right up a whopping 62% year over year.
Absolutely. Their expansion into chemicals, auto, and e-commerce is clearly paying off. And within ISC, it seems their push into FCL is gaining traction, with volumes up 11% year over year. They're cleverly leveraging their LCL dominance to tap into new markets.
Now, the next question asks about profit margin evolution in Q3 FY25 and what factors contributed to any changes. This is where things get a bit more nuanced as we see different trends across segments. Overall, their consolidated EBITDA margin, a measure of profitability relative to revenue, is down slightly year over year.
But if we break it down, some interesting variations emerge. The express distribution segment saw its EBITDA margin jump from 1.9% in Q3 FY24 to 5.6% this quarter.
That's a direct result of their cost optimization efforts. They're squeezing more profit out of each rupee of revenue, becoming much more efficient. And in the contract logistics segment, their EBITDA margin remains stable, but it's worth noting that this is still a high-margin business for them.
Exactly. They're commanding premium pricing for those specialized services, which is fantastic for overall profitability. The next question asks about any unexpected expenses or cost optimizations that significantly impacted financials. And I think we've already touched on the most significant factor here.
Yeah, the restructuring costs associated with separating their international and domestic businesses are definitely impacting their bottom line.
Yes, and during the earnings call, they also specifically mentioned severance costs related to organizational changes. It's a delicate balance. They're incurring costs now to streamline operations and unlock future value, but those costs are putting pressure on short-term profitability.
Makes sense. The following question is about their debt and whether they've made progress in reducing liabilities.
Well, we know their net debt is slightly down from the previous quarter, but it's still a considerable sum. It'll be interesting to see how they manage this, especially with their continued investment in growth and technology.
It's a tightrope walk, investing for growth to stay competitive while carefully managing debt to ensure long-term financial stability. Speaking of competition, the next question asks about Allcargo's performance relative to its peers in the logistics sector. Unfortunately, our sources lack specific competitor data this time.
However, we can make some general observations based on industry trends. The logistics sector is getting increasingly competitive, with new players entering the market and existing players expanding their capabilities.
Plus, the e-commerce boom is adding even more pressure on logistics companies to deliver fast, reliable, and affordable services. It's not just traditional logistics providers. They're competing with tech-savvy startups and even e-commerce giants, building their own logistics networks.
Allcargo needs to stay nimble to maintain its edge in this dynamic landscape. Their restructuring and focus on technology could be key differentiators in this crowded market. Which leads perfectly into the next question. What industry-wide trends are impacting the logistics business, and how is El Cargo adapting?
Well, we've discussed the e-commerce boom and the growing complexity of global supply chains, but there's also the issue of sustainability, right? Consumers and businesses are demanding more eco-friendly logistics solutions.
Absolutely. And Allcargo has been quite proactive on this front. They've implemented initiatives to reduce their carbon footprint and are exploring alternative fuels. They're not just reacting to trends, they're trying to shape the industry's future.
Sustainability is becoming a competitive necessity, not just a feel-good initiative. Now, question number 8 dives into how inflation, fuel prices, and global trade fluctuations affect Allcargo's earnings. These are macroeconomic factors beyond their control, yet they can significantly impact their business.
Yeah. During the earnings call, they acknowledged that the global macroeconomic environment remains unpredictable, citing geopolitical events and economic uncertainty. They also highlighted the impact of U.S. tariffs on certain trade lanes.
Yeah, those tariffs can shift global trade flows, directly impacting demand for their services. They also mentioned the war in Ukraine and its potential impact on the European economy, a key market for them.
It's a turbulent sea, and they're constantly adjusting their sails to stay on course. They're making strategic decisions based on imperfect information, which has to be stressful.
Next, we shift focus back to Allcargo's actions. The question asks about major investments, acquisitions, or expansion plans announced during the quarter.
Well, their restructuring is a big factor here, as it's likely to shape their investment strategy going forward. Once the international and domestic businesses are separate, they'll have more flexibility to pursue investments aligned with their specific goals.
Right. But even before the restructuring is finalized, they're investing in key areas like technology and talent. Remember their plans for operational centers in the Philippines, Turkey, and Mexico.
Those centers are part of our strategy to centralize resources and potentially reduce costs. And they're continuing to expand their global footprint with new offices and partnerships. Challenges and uncertainties aside, they're not shying away from growth opportunities.
It's about playing the long game, investing in the future while navigating the present. Now, question number 10 is all about tech, how Allcargo is using technology and automation to improve operational efficiency.
We've talked about their ECU 360 platform, but it's just one piece of their digital transformation. They're implementing robotic process automation, RPA, AI-powered pricing models, and even blockchain technology to enhance transparency and security.
It's not just about efficiency for them, it's about creating a better customer experience. They're using tech to offer real-time visibility, personalized services, and smoother interactions for their clients. It's almost like they're trying to reinvent the customer service experience in a sector that's not known for being particularly customer-friendly.
That's a great point. It's another example of how they're trying to use technology to differentiate themselves. Moving on, the next question asks about the role of sustainability and green logistics in their strategy.
It's clear they're not just paying lip service to this. They're investing in fuel-efficient vehicles, optimizing transportation routes, implementing energy-saving measures in warehouses, and actively participating in industry initiatives to promote sustainable practices.
They're demonstrating that sustainability isn't just good for the planet, it's good for business. It attracts environmentally conscious customers, reduces costs, and enhances brand reputation. It's a smart strategic move.
Question number 12 focuses on Allcargo's international business and global market reach.
The restructuring is the most significant development here. It will create a separate entity focused solely on the international market, underlining the importance of global operations to their overall growth.
They've been aggressively expanding in various regions, particularly emerging markets with significant growth potential. And their global network of offices and partners gives them a real edge in serving multinational clients who need solutions across different countries.
They're positioning themselves as a global logistics powerhouse capable of handling the complexities of international trade. Now let's shift gears to investor and shareholder insights. Question number 13 asks about the stock market's reaction to the Q3 FY25 results.
Unfortunately, our sources don't include real-time stock market data for analysis.
However, we can speculate. Given that the market often fixates on short-term profit, the dip in Allcargo's net income might initially worry some investors.
But as we've discussed, there's more to the story. Savvy investors will likely look beyond the headlines and consider the company's long-term potential, their strategic investments, and their strong market position. The restructuring and their tech-focused initiatives could be seen as positive signs, even as there's some short-term pain.
It's about balancing short-term performance with long-term vision. Question 14 asks about the key takeaways for investors and stakeholders from this earnings report. What are the big-picture insights?
Well, Allcargo's at a crossroads. They're facing challenges but are making bold moves to position themselves for the future. They're embracing technology, expanding globally, and restructuring to unlock value. It's a dynamic story that will be fascinating to watch unfold.
For investors, it's a story of potential reward and potential risk. It requires careful analysis and a long-term perspective. Finally, question 15 is about the company's guidance or outlook for the next quarter and the rest of FY25.
Yeah, companies are often hesitant to give specific financial guidance, and the restructuring and external scrutiny add more uncertainty to Allcargo's case.
But during the earnings call, they did highlight their key focus areas for the coming quarters: cost optimization, leveraging technology, and driving growth in express distribution and contract logistics.
They also mentioned they're closely watching the global macroeconomic environment and adjusting their strategies accordingly.
So while we don't have specific numbers, we get a sense of their priorities and their approach to navigating the choppy waters ahead. We've covered a lot of ground here, answering your questions and gaining a comprehensive view of Allcargo's Q3 FY25 performance.
And now it's time to wrap up this deep dive with some final thoughts and a provocative questions for you to ponder. Okay, so we've really dug deep into Allcargo Logistics, their wins, their challenges, their ambitions. It's been quite the journey, and I don't know about you, but I'm feeling like I have a much better understanding of this company and its place in the global logistics landscape.
Yeah, it's been fascinating to see how this industry is evolving. It's not just about moving goods from one place to another anymore. It's about navigating complex global trends, harnessing the power of technology, and constantly adapting to stay ahead of the competition.
And Allcargo is definitely trying to do all that. But as we've seen, there are bumps in the road: debt restructuring, regulatory scrutiny, global economic uncertainty. It makes you wonder what the future holds for them.
It does raise the question, listener, can Allcargo overcome these obstacles and become an even stronger player in the global logistics arena? Or will they get bogged down and struggle to keep pace with more agile competitors? It's something to think about.
Yeah, it is, and it's a question we'll be keeping in mind as we continue to follow their story. This deep dive has highlighted that we're not just summarizing information, we're trying to help you understand a company and its place in the world.
It's about connecting the dots, analyzing trends, and giving you, the listener, the knowledge and insights you need to make sense of this ever-changing business world.
So to wrap things up, let me leave you with a final thought to ponder. Allcargo is making a big bet on technology to transform the logistics industry. Can they outmaneuver the traditional players and stay ahead of the digital curve?
And that's a question that goes beyond just Allcargo. It speaks to the larger disruption we're seeing across industries as technology reshapes the way we live and work. It's something we'll continue to explore in future deep dives.
And remember, listener, when Allcargo releases their next earnings report, you know where to find us? We'll be back to unpack it all and uncover the next chapter in their story. Thanks for joining us on this deep dive.